Hello and good evening, everyone. Today's webinar is on securing your future national pension system, that is NPS versus Unified Pension Scheme UPS. What you need to know. For this, today we have with us Suresh Sadgopan sir. He is the managing director and principal officer of Ladder 7 Wealth Planners Private Limited, a SEBI registered fee only financial advisory firm in India. Sir holds an MMS and certificates like CFP, CTEP, and RLP. Sir is a frequent speaker and writer on financial planning and personal finance. Suresh sir has founded the Financial Planners Guild India, that is FPGI, where he serves as president. He is also a founding member of the Associate of Registered Investment Advisories, that is ARIA. Sir has been recognized among the 100 and 101 topmost influential BFSI leaders in 2020 and 2023. Sir has authored a book by name If God Was Your Financial Planner, which was published by Westland Publications. Now, a short glimpse about NISM. NISM is a public trust established in 2006 by the SEBI, the regulator of the securities markets in India. The institute carries out a wide range of capacity building activities at various levels aimed at enhancing the quality standards in securities markets. Now, before beginning the session, I would like to request all the participants to note some important points. First, that is question will be taken at the end during the Q&A segment. Second, all participants will receive a participation certificate within 3 to 4 working days. And third, that is the recording of this session will be available on the NISM's YouTube channel. Now I request Suresh sir to begin with the session.
Uh, Thank you so much for the introduction. So, good evening to all of you. It's my pleasure and privilege to be before you, and I'm going to talk about, in brief, about NPS and UPS, more about UPS. And what we are going to discuss is whether NPS is better or UPS is better, or in what circumstances NPS may be better, or UPS may be better, and what probably are the options before you. Uh, Firstly, let me tell you that it's very difficult to decide which is the better one on a very broad basis. And we'll be talking about why it is difficult to decide on a broad basis. But before that, let me present you what is NPS, what is UPS. I'll show you some calculations also so that you kind of understand what you should look at, how much you will be approximately getting, all that. Of course, it can vary from person to person. So let me just get into this and then we can have the questions at the end. Yeah, so I'm going to NPS first, National Pension System. This was introduced in 2004. Before that, it was the old pension system. Old pension system was a defined benefit scheme of the central government. And when we talk about defined benefit, what it means is based on the last pay drawn, they have a formula and they give a certain pension to the employee and also to the family later on. So that was the initial scheme that is called a defined benefit scheme. It's called defined benefit because it has no bearing to how much you have contributed. Whatever is the benefit that needs to be given is defined right from the beginning. So that is why it is called a defined benefit scheme. But there were government was running into deficits, and that is why, and it was not sustainable in the long term. So that is why they had come with the national pension system, which is a defined contribution scheme. So in the case of a defined contribution scheme, what happens is the government contributes a certain amount, the employee contributes a certain amount, and it builds up to a particular corpus. Based on the what the corpus builds up, then the pension amount is decided. Pension amount, whatever is payable to the person based on sustainability, that will be decided, and the pension fund agency will be paying out that sum of money. So that is a defined contribution scheme. As the name itself suggests, it all depends on how much you are contributing. In the case of NPS, there is no upper limit to how much you can contribute. Just like voluntary provident fund contribution, which many of you might be doing, apart from the PF contribution, you will also probably be contributing voluntarily. In the case of NPS also, you can contribute over and above what is mandatory. So if your corpus is much bigger, then of course potentially your pension amount or the annuity amount is also that way bigger. So I'm just going to give a certain highlights of this. Many of you may already know about this, but I'm just going to touch upon the basics of NPS. So here in the case of NPS, you have equity, you have government debt, you have corporate debt, and you have alternate assets. So equity can go all the way up to 75%, debt portion can go all the way up to 100%, and alternate assets can go up to only 5%. So that is how it has been classified under NPS. Voluntary contributions, as I mentioned, are possible. One can also choose the fund manager and change it every year if at all you want. In the case of UPS, that is not possible, and we will come to that. In the case of NPS, I think 8 or 9 fund managers, pension fund managers are there. You are free to choose the fund manager that you want your fund to be managed with. Final withdrawal of 60% is permissible at the age of 60. That is, this is in NPS. Balance 40% you will have to draw out as a pension. That amount you have to retain there, and that will be used for giving you the pension. This is something similar to what it is currently in UPS. In fact, UPS also and even NPS also have evolved over a period of time. So now it's kind of converging. Incidentally, UPS is also coming under NPS. Okay, in case that I wanted to give you that clarification. Pension in the case of NPS can be deferred up to 75 years of age, even the final withdrawal. We'll be talking about certain terminologies like this, final withdrawal. That is whatever is the corpus that you have created. Let us say for example sake, suppose your corpus is, let us say, 1 crore at 60. You can withdraw up to something like 60 lakhs, and 40 lakhs will be used for annuity. And if you do not want pension from the age 75 for age 60 for some reason, in the case of NPS, you can always defer it to a later point. And even the final withdrawal in the case of NPS is possible to be deferred to a later point. So it's possible. Early withdrawal, in some cases, if somebody wants an early withdrawal, up to 20% is possible to be withdrawn. But 80% still will need to be annuitized in that case. So this is broadly what is possible in NPS. Premature withdrawals are again possible, like in the case of government provident fund also, like for illness, disability, purchase of residence, children's education, marriage. So these kind of certain very specific situations you can withdraw money. Now let us come to UPS. Unified Pension Scheme is coming under the National Pension System. Uh, in the case of Unified Pension Scheme, this is a kind of a, I would say, a slight bit of a hybrid between a old pension scheme and a new pension system, in the sense that Unified Pension Scheme also gives, in a sense, a defined benefit. And the benefits are clearly delineated. It's not exactly like the old pension scheme, but they have brought it very close to the kind of a old pension scheme, at least in the sense that it is a defined contribution with certain conditions. So central government employees who are covered under the NPS can choose to come under this. I'll just give you again the highlights and then we'll go to other aspects. Uh, Here, unlike in the case of NPS, where you can deploy in equity, you can deploy in debt, you can deploy in corporate debt, alternate assets, and things like that. Here, it is either government debt or a certain life cycle based fund. So, what is a life cycle based fund? We are going to touch that. So, there are some differences between NPS and UPS. Voluntary contributions, of course, here also it is possible. Here also final tax-free withdrawal is permissible up to 60%. I'm saying up to 60%. If you do not want to take out 60%, you want 50%, 40%, it's entirely your choice. You can do that. Partial withdrawals are again possible, like in the case of NPS, under certain conditions. Annuity here depends on the length of service emoluments, which we will now come to. These are only the highlights. Who is eligible? Applicable to existing government employees in service as on 1st April 2025. It also is applicable to new recruits to central government service who join on or after first day of April 2025. And central government employees who are covered under NPS who have superannuated before also can be covered under this. Yeah, it is eligible. The family pension portion is eligible only for the legally wedded spouse. So when we talk about family here, it is only the spouse who is going to get. After that, the pension will stop. And how much will the spouse get? All those things are also covered later on. So now there is an individual corpus and there is a pool corpus. So there are two portions here. Uh, I mean, till the time one is working, one will be contributing 10% to the individual corpus, and the government also will be contributing similar amount to the individual corpus. Over and above that, the government will also contribute an additional 8.5% of the basic pay and DA. Uh, I mean, on an aggregate basis, it'll for all the employees, it'll give that. So essentially, government contribution here in this case is 18.5%, which is actually very good and substantial. Now, transfer of balance. So pay attention here. Transfer of balance from the individual corpus of the subscriber. Subscriber shall authorize transfer from of the value of units in the individual corpus to the pool corpus. So what happens is in the individual corpus, I can put it in the government scheme, or I can choose a life cycle fund which will have a certain amount of equity. Now, equity being a volatile asset, the final corpus at the time of retirement can be higher or lower than the benchmark corpus. Benchmark is a government scheme. So if it is higher, you will be able to withdraw the amount. If it is lower, you will have to put in that amount. Either you have to put in that amount to bring it at the same level as the government corpus, the benchmark corpus, or you will have to take a haircut to the extent of what is the shortfall. We'll come to that again. That also is covered. So investment of pool corpus will be determined by the central government in the pension fund, which they have established for that purpose. Investment of individual corpus, here UPS subscriber shall have an option to choose the pension fund. Default pattern is the government fund, the scheme G. There is also another choice, life cycle based scheme. This is what I was talking about. One of the schemes is a conservative life cycle fund with a maximum equity exposure of 25% only. And it will keep coming down as the age goes, I mean, as you approach towards retirement. There is a moderate life cycle fund also, which will start with 50%. And then as you go towards retirement, it will keep going down. So this is called a life cycle fund. So you can opt for a government security scheme right from day one, or you can choose a life cycle based fund. You can also change from one fund to another fund uh, at various points. Like here it is mentioned, choice of pension fund can be changed once a year, and investment choice, that is, you can change between conservative, moderate 2 times a year. I mean, these are all available, not necessary that you will have to keep doing this kind of a thing. Here, investment of contribution, UPS subscriber exercising choice of pension fund and investment pattern shall 1 second, shall be entitled to a surplus amount. This is what I was talking about. Suppose your investment corpus, suppose you have put it in equity and it is more than the benchmark corpus, which is the government corpus, you will be able to take out certain money. Suppose it is above by 2 lakh rupees. The government corpus shows 60 lakh, your corpus is showing 62 lakhs. You can take out 2 lakhs. And in the case there is a shortfall, suppose your corpus is showing 58 lakhs, either you can pay into the government corpus 2 lakh rupees because you have chosen your individual corpus and it is short by 2 lakh rupees. Either you can top up that by 2 lakh and then get the normal pension that you are eligible under UPS, or you can get a proportionate, because it is 2 lakhs less, you can get a proportionately lower pension amount. And what that will be also we are going to see. Now, benchmark corpus is the, I mean, default pattern government corpus. So that is the thing. For each employee who has exercised the UPS option, a benchmark corpus value shall be computed for comparison with the individual corpus, because we need to know whether the individual corpus is at exactly the same level. That is, it will be at the same level if you have from day one, if you have opted for the government corpus. But in between, if you have changed from individual corpus, I mean, the government corpus to life cycle corpus, which has equity, it can be higher or lower. So it all depends on that. Um, Employees superannuating after qualifying, minimum is 10 years of service. So this is the main thing that you will have to uh, keep in mind. Minimum 10 years of service has to be there to be eligible for UPS. Voluntary retirement after minimum qualifying year of service period of 25 years. That is what has been given here. If the subscriber has been dismissed from the service or who has resigned from the service, for those people it is not eligible. Yeah, so now we are coming to the crux of how this is going to be calculated. I mean, this also I'm just going to touch upon. What is really, really important is not how it is calculated. I think many of you might have really gone through this whole thing, but all the same, I'm going to go through this. What is really important is what is the decision that you need to take in terms of whether it is UPS, NPS, how much of money you should withdraw, in what circumstances, what will be ideal from your standpoint. So that is what is really, really important. But all the same, I'm going to go through this. So the lump sum payment amount is going to be based on the basic pay and DNS allowance by 10 and the length of service. Length of service in this case is not the number of years, it is the number of half years. So in this case, the lump sum payout is over and above all the other benefits that you will receive in terms of the pension. And this is apart from the gratuity. Okay, so this is a very clear cut benefit which is not available in NPS. There is no such option available. So the assured payout here, which is the pension amount, it will not assured payout and admissible payout. There are two things. Assured payout is based on what is the amount you have to get. Admissible payout is if there is a shortfall or if the length of service is less than 25 years, then what it will be. So based on that, admissible payout will be calculated. Now let us talk about assured payout. So here it is average last 12 months basic pay, half of that into the number of qualifying months of service. That is, suppose somebody has worked for 15 years at the time of retirement with the government. So it will be 180 by 300. The minimum, as I had mentioned here, is 120. Less than that, UPS will not be applicable. And if somebody had worked for more than 25 years, it will be capped at 25, which is 25 into 12, which is 300. Okay, so minimum guaranteed payout will be at least 10,000. Uh, if it is going to be less than 10,000, suppose as per the calculation it is coming to 8,000, the minimum payout will be at least 10,000, assuming that you have been in employment for at least 10 years. So this is definitely a positive. I mean, we are going to talk about this later also. This is definitely a very positive thing in UPS. Proportionate payout in case of qualifying service of 10 years or more, but less than 25 years. Obviously, if you get if it is say 15 years, for example, it will be 180 by 300. I showed you the formula. It will be 180 by 300. So that is what is called the proportionate payout. That will come under the admissible payout. We'll talk about that admissible payout now. So assured payout, we have already seen the formula. Now in the case of assured payout, yeah, admissible payout is assured payout into ICBC. So what is IC? Individual corpus by benchmark corpus. I gave you that example that benchmark corpus is let us say 60 lakhs. Individual corpus is let us say 58 lakhs. Then 58 by 60. So that will be a fraction below one. So your individual corpus is less than the benchmark corpus. So you will be getting admissible payout, which is slightly going to be less than the assured payout. Assured payout. Yeah, that's correct. And the other thing is final withdrawal. See, in the case of UPS also, just like in the case of NPS, you can withdraw a certain amount. I gave you that example. If you have, for example, 1 crore, you can withdraw up to 60 lakhs. 60% you can withdraw, right? So if you are withdrawing 60%, let us say, then 1 minus 60%, that is 40%. So that will be applied here because that 60% would have come to you, 60 lakhs would have come to you, and you are free to use it any way which you want, or you are free to deploy it and maybe in an FD or maybe in some other form. and again get some income out of it. So the assured payout will obviously come down because of, admissible payout will obviously come down because of these two aspects. Yeah. So family payout will be 60% of the admissible payout, and this is only to the legally wedded spouse. So that's very, very clearly mentioned here. It is not going to be the son or daughter or anybody else. So this has to be kept in mind. DNS allowance is, of course, available to central government employees. It is available here as well, very much. So here it is basic pay plus DA always. So that is going to be available in the admissible payout and the family payout. So I'm going to show some 2, 3 illustrations to, for us to get this correctly. So illustration one, this is also there in the UPS document. So it is not something I have worked out. It is already there in the UPS document which government has put out. So I'm using the same thing to illustrate the point. Here, somebody has worked for 15 years, 11 months, and 12 days. So qualifying service is 191 months. 12 months average basic pay prior to superannuation. Basic plus DA. Basic is 52,894. Last month basic. So there are going to be two things which we are going to use: 12-month average basic in some cases, and last month basic pay also we'll be using in some cases. I'll show you that. So in this particular example, there is a partial withdrawal of 1,15,000, whose value had he not withdrawn, whose value would have grown today to 1,95,130. Okay, so let us keep this amount in mind. There is a partial withdrawal in this case. UPS corpus on the date of superannuation. So in this case, the partial withdrawal has happened. Okay, and the value at the time of superannuation is 27.43 lakhs. In this case, the subscriber has continued with the default pattern, that is the government pattern, throughout the service. So that is also given here. And this gentleman or lady is opting for a 60% final withdrawal at the time of superannuation. So I gave you that hypothetical example of 1 crore. This person in that example would have withdrawn something like 60 lakhs. So benchmark corpus of the employee is 29 lakhs, 29.38 lakhs. So in this case also, the benchmark corpus is ahead of the individual corpus. So 27.43 versus 29.38. So let us get into the calculation. DR increase is supposed to be taken as 56% in this case. So the illustration, so last month basic pay is 53,600. DNS allowance is 30,000 and odd. Yeah, lump sum payment. So lump sum payment is what you are anyway entitled to even before the pension is given out to you. So in this particular case, for the calculation of the lump sum payment, last month basic pay is taken into account. Okay, last month basic plus DNS allowance. So in this case, it is 83,616. Qualifying service we have already seen is that calculation. 31 fractions. So 31 6-month periods are there. So we will use that in the calculation. So this is the formula: E by 10 into L, that is 83,616 by 10 into 31. So that comes to 2.59 lakhs. So this is an amount which one will get as a lump sum at superannuation. This is apart from gratuity. Now assured payout. So now what is this assured payout? So assured payout is half of P into Q by 300. So here half of P. Now this is P is emoluments, average of the last 12 months. So that is 52,894. And 191 is the number of months divided by a total of 300, maximum of 300. So that is coming to 16,837. Okay, so 16,838. Now, what is the admissible payout? This is the assured payout. Now, what is the admissible payout? In this case, this person, the individual corpus is less than the benchmark corpus. We saw that, right? So this fraction is going to be less than 1. So consequently, this is going to lessen. Similarly, this person has taken out 60%. So from the from the assured payout, these two things are going to reduce the amount that this person is going to get. 6288 is the ultimate figure when we actually take into account all these things. So then the dearness relief comes into the picture. So here that is 56% of the basic pay. So that is 3521. So in this case, the amount permissible is 9810 as the monthly payout. So in this case, please don't mistake this particular thing. I told you right in the beginning that if it is below 10,000, you are eligible to get at least 10,000. Below 10,000 means before any withdrawals, and if ICBC those two things, as long as they are equal and it is below 10,000, you will get at least 10,000 at the basic pay level. So in this particular case, that is not applicable because 40. This is after 40% has been 60% has been withdrawn. So here it is not really permissible. Now let us look at NPS. So NPS in this case, the corpus is 27.43. In this case, also had the same person invested in a government corpus. And let us assume that this person has opted for a 60% final withdrawal in this case. I mean, I'm just trying to compare the two. So after the final withdrawal, the amount of corpus available for distributing pension will be 10.97 lakhs, which you are seeing here. Okay, the amount of pension that is expected to be available on a monthly basis will be roughly 5486 per month to the pensioner or spouse. There is only one fundamental difference here. In the case of NPS, it is paid from the corpus which is available. So it does not depend on whether it is the pensioner or the spouse who is actually getting the pension. So the amount will not vary. In the case of the UPS, the family pension comes down to 60%. In this case, it will be constant because it is on a contribution basis you are getting. This is your money. You have contributed for it, and you will also get the money at the end. So in the case of NPS, you will get the money at the end. In the case of UPS, you will not get the money at the end. So that is also another difference to be kept in mind. In the case of NPS, as we have calculated, we are going to get something like 9810. It's substantially higher in the case of UPS. So it's higher by almost 80%. It's higher by 80% from here. So it's good. It's good, but let me park it here for the moment. I don't want to tell you it is good. The figure is higher, so it is good, and you should go for it. I mean, life is far more complicated than that. Okay, so we'll come to that. So in the case of the spouse being there, I mean, if the person who has been a government employee has passed away, then the spousal pension will directly go somewhere near that of NPS pension. It will be somewhat similar, though this is still higher. Okay, so we will have to really understand one thing. It is not about only one person receiving the pension, the employee. It is also the spouse, which we will have to keep in mind because we don't know how long the employee is going to survive. Today, the survival rate is pretty good. I mean, so people may survive well beyond their 80. So it's very much possible that the full pension will be, the employee will be eligible for the full pension and for a very long period. So in that situation, it is fantastic. But you would never know. In another situation where it is the spouse who is going to receive, it is going to be dramatically lower. So we have to keep this in mind always while we are making a decision. I'm going to give you another illustration. In this case, I mean, basics are the same. Qualifying period is the same. 12-month basic, these things are still exactly the same. Partial withdrawal is also there. But in this case, there is no withdrawal at the final level because this person wants somewhat higher pension amount. So let us understand what is the pension amount. In this case also, because there is a partial withdrawal, the individual corpus is less than the benchmark corpus. So let us look at the calculations. Basic pay, these are all standard. Okay. So lump sum, so this is the same thing. So lump sum payment is still exactly the same, uh, like what we had calculated last time. Now assured payout in this case is Again, I mean, the basic figure is 16,838, like in the last example. Now, what is different is in the case of admissible payout. So in this case, if you recall, this 27.43 by 29.38, this was there in the last example also. Because in this case also, they had taken out some money in between. So the IC, that is the individual corpus, has gone down to 27. And the benchmark corpus is higher to the tune of 1.15. Okay. So whereas since this person has not taken out any money at the final as a final withdrawal, so final withdrawal is zero. So that is why it is one. So here the admissible payout is a comparatively higher number, 15,719. And to add to this is the dearness relief. And when we consider both these things, it comes to something like 24,000 and odd, 24,500 in odd, and odd in this particular example. Now let us look at NPS. So here it is 24,500 in the case of UPS. In the case of NPS, it is far lower. Okay, it is only 13,715. I have assumed no final withdrawal in this particular case also because I want to compare like with like. So no final withdrawal. So versus 24,524, it is only 13,715 in the case of uh, NPS. But again, when we have a situation where it is the family pension, it is coming somewhat near to the NPS kind of a pension. So this is something that we will always have to bear in mind. So now illustration 3, this is the last illustration. After that, we will have some discussion. In this case, this person is superannuating after 10 years and 3 months. Qualifying period is 123 months. Give me a mobile. 123 months. 12-month average basic and last month basic, those figures are here. UPS corpus is, I mean, much lower in this particular case because they have contributed for a far lower period, and no voluntary contributions have been done by this person, and no partial withdrawal. Okay, and this is a default government fund pattern. So no final withdrawal also opted in this case. Uh, so this is the situation. So let us see how this works. Okay. So last basic dearness allowance. Okay. Lump sum payout is okay 79,248. I'm not going into the details because I have explained that 2 times. Now assured payout. In this particular case, we have to understand one thing. In this case, the assured payout will be at least 10,000 because this amount is coming to be much less than 10,000. Okay, the basic figure is coming to be much less than 10,000. So in this particular case, the minimum amount that will be paid out to the pensioner will be 10,000. Okay, so here, sorry, yeah. So admissible amount is 10,000. Uh, then dearness relief on 10,000. It is not on 5,600 or whatever that figure was. It is on 10,000. So the minimum payout that this person will get will be 15,600. So you know where it is going to be clearly beneficial. So in the case of a person who has a short service with the government, and when you calculate that and it is coming to below 10,000, the government is ensuring that at least a basic amount is going to come enough for that person to at least meet the basic requirements. So in this particular example, this is coming to some 15,600. Of course, I know that 15,600 per se may not be enough, but I'm guessing that there are going to be other sources which are going to be available for that person. So uh, but the government is definitely ensuring that at least this much amount will be available, and which is far higher than what you will get from NPS, which is what I'm showing here. If the corpus was, let us say, 8,000 rupees from NPS, so the amount that is going to be available is going to be only 4,000 rupees in the case of NPS, assuming a 6% payout. 6% is a reasonable payout, which I'm assuming. So 4,000 amount is what is eligible, what will be available for a person who has opted for NPS. In this case, we have already seen that 15,600 will be the amount to the pensioner, and 9,360 will be the amount to the spouse. So in this case, both the figures are substantially higher than the 4,000 amount which one can get from NPS. So this should give you that idea that in what situations uh, which will be useful. Now, as far as I told you before also that retirement gratuity and death gratuity both are available as before, both in NPS as well as UPS. It is available as per the rules. I mean, I have just put it here. You might be already knowing the rules, but the fact is that gratuity is available in this case. This is over and above the lump sum payment, which we had discussed about. Now, so this is the most important thing. I want to highlight certain things so that you will be able to take a proper decision. I think you have time till September. So those of you who have not yet taken the decision, this will be helpful to you. I again reiterate that there is no one way of actually saying that this is the best option. So each case we will have to really look at uh, whether this will be ideal, NPS will be ideal, or UPS will be ideal. So we will have to do the calculation in each case. But what I'm going to show you now is going to be helpful. So let us look at each of those things. Return of the corpus, it happens in the case of NPS. It does not happen in the case of UPS. So in that sense, you can say that in the case of NPS, it is positive. In the case of UPS, not so much. Inflation adjusted pension lifelong because of the dearness allowance. In the case of UPS, yes, it is going to be inflation adjusted. So in that sense, it is positive. In the case of NPS, there is no inflation adjustment of any sort. However, if you want to, you can invest in equity, which in a sense will provide inflation adjustment over a long period of time. But of course, everything depends on the market. So I'm not calling it negative, I'm calling it neutral. So you can do that adjustment because if you look at the equity market over a period of time, it does perform well. I mean, even in the Indian equity market, if you really look at it, 15% return from 1979 is the overall compound annual growth rate. So while we don't know what will be the prognosis for the future as far as the stock markets are concerned, the returns are concerned, I would say that a double-digit return is can be expected in the foreseeable future. So that's how I would put it. So that is why I have said this to be neutral. The minimum pension amount of 10,000. I mean, we saw that it's a huge positive. Government is ensuring that a person does not get a minuscule amount, which is meaningless. Government is ensuring that it is at least a reasonable 10,000 rupees, and if you add that to the gratuity, it is more than 15,000 rupees. It's a very good gesture, and it is very positive in the case of UPS. There are no minimums in NPS because NPS is a scheme which has been designed like that. So we cannot quibble on that. NPS is a system where you pay as you go, and you are free to choose equity, or you are free to choose alternate assets. You are free to choose corporate or government bond. You are free to choose the way you want. So I mean, lot of options available to you, but I mean there are no minimums. So from that point of view, it can be considered to be a negative. Retirement and death gratuity, like I mentioned to you, it's available in both. So that is a very good thing in both cases. Final tax-free withdrawal of up to 60%. So this is available in both NPS and UPS. So there is no difference in both the cases. I would rate these two options as very positive. In fact, final tax-free withdrawal is going to be a game changer. This option is going to be a game changer for a lot of you. I'll come to that slightly later. Family pension of 60% to the legally wedded spouse in UPS. This is not going to go to son, daughter, or anybody else. So in that sense, it's not great. But at the same time, since government is giving a certain amount of pension, which is partially, I mean, as per a formula, it is guaranteed. It is not so bad. It is actually good. So I would say it is neutral. Neutral only because the family pension is coming down to 60%. In the case of NPS, I mean, it will come to the same level to the spouse, whatever it is. I mean, it can be lower than UPS amount, but it will be the same amount. But the more important thing is the final, the balance amount which is there in the kitty will come to the family or the spouse or I mean the family. It will come to the family. So that is a positive. In the case of UPS, the employer's contribution rate is 18.5%, and in the case of NPS, it is 14%. I would say it is neutral because um, I mean it is the government which is contributing. As far as the employee is concerned, it is 10%, and 18.5 is pretty good. I would say the contribution rate from the government side. I would still call it neutral because it is not affecting you that much. In the case of NPS, employees contribution rate is 10%. Okay, I would say in both the cases, I would say it is neutral. I'm sorry. Risk factor, UPS is risk free as it provides an assured pension amount. So it is positive. In the case of NPS, there are market risks depending on how much is in which fund. I mean, you are free to choose a government fund even in NPS, or a corporate fund even in NPS, where the risk will be comparatively lower. If you are choosing if you are choosing a equity fund and the pool is less or more, it's a choice that you have made. I mean, you cannot really complain there. So I would say that is a neutral. So where you have chosen a government fund and it is equivalent to, let us say, UPS, it is positive. Okay. Lump sum amount payment in the UPS, lump sum is provided to the employee. I mean, this is only available for UPS. Okay, there is no such provision in NPS, so very clearly it's a positive when you look at UPS. Now, in what situations, what will be beneficial? So I'm trying to shine a light on what could be useful to you. Like I said right in the beginning, I cannot make a determination today sitting here what will be the best for whom today. Okay, a lot of things will depend on a particular person's situation, and we will really need to work out. But I will give you the broad contours of how you should consider this. If it is a short service closer to 10 years, 10 years, 11 years, that kind of a thing, I think it's a no-brainer to opt for UPS. Okay, so when I'm assuming that it is a short tenure of 10 years or something like that, I'm assuming a whole lot of money is outside the purview of UPS. And I'm assuming that there is a lot of money which can come from other sources for the retirement phase. So opting for UPS may be a good choice here. And in the case of medium tenures like 15 to 25 years, it could be a close call, difficult to say which will be better. But again, even on this also, I'm going to talk about this. But it could be a close call, but we need to really work out. Above 25 years, in this particular case, probably NPS could be better because here it is capped at 25. If you recall that calculation, we had said that it will be the number of months by 300. That 300 is fixed. So if you have served for, let us say, 26 years or 27 years, above will be 300. So the amount will not go up. So probably maybe NPS could be a better option for somebody who's above 25 years. Again, this is something that we need to work out. On the face of it, it looks like probably NPS could be a better option, assuming one has been contributing for a continuously from 2004. If someone is very risk averse, so in what situation one can really opt for UPS, irrespective of whether UPS is great or otherwise. Okay, if someone is very risk averse or someone wants a regular pension, okay, they want a regular, clear cut regular pension, and the pension should only rise, it should not go down. Okay, does not want to manage the funds, they don't want to get into all that. In the case of UPS, government is going to manage the fund. You are not worried about that. Only during the contribution years, it's an individual corpus, and you will have to manage. Once you come to the point where the pension starts, it is only the government which is going to government pension fund which is going to manage, and is also okay with not receiving anything after self plus spouse lifetime, because finally that amount whatever is going to be used for giving you the higher pension. So please understand, it is not that the government is depriving you of something. They are giving you a much higher pension during your lifetime. So in a sense, it's a very good thing. Okay, but if you have amassed a substantial amount of money, like in this corpus, that amount you are not going to get. You are going to get a fairly good pension during your lifetime. The only minus point in this is that nobody knows how long one is going to survive. Like I said earlier, I mean, most of the time it is going to be well beyond 80. I mean, we are seeing that happening across the board. But we don't know. I mean, life is uncertain. We don't know. So whether one will survive, one's spouse will survive, and if suppose the self and spouse are surviving only for 10 or 15 years, I mean, the amount that we had right in the beginning could have been a substantial amount, and the benefits one has received could be not commensurate with the amount that we have accumulated over a period of time. And I mean, there is nothing one can do about it. But during the lifetime, government is ensuring that you get a much higher pension as compared to the other option available. So in this situation, one can opt for UPS. If somebody wants the corpus to pass on to the nominees, okay, and is okay with the bit of market volatility, meaning they are okay with a equity oriented scheme or something like that, and that is why they will choose NPS. Otherwise, they would have come to UPS, right? So they are okay with a bit of market volatility, which they want to control. In the case of NPS, you can control to the extent of 75% equity allocation with a pension that can vary with the corpus. So this is something that they will have to contend with. As far as the pension is concerned, it is determined entirely by the corpus size. So the pension can definitely vary. Wants the flexibility to shift for annuity later. So I told you that in this particular case, in the case of NPS, it's not necessary that you have to get your pension from age 60. Suppose you have some sources of sustenance, or you have a son or daughter who is saying that I will take care of you for next 5 years, 10 years, whatever, or you have some other sources. So you can shift it to a later point, which can be up to 75 years of age. Even the final amount that you want to commute, that is 60 up to 60%, you can commute at a later point and you can take it up. So that option is available to you. So if these are the things that you are looking for, you want that flexibility in all situations, and you're okay with a bit of volatility, you're okay with the pension being slightly lower, higher variability in pension, unlike in the case of UPS where it will be only a growing amount. Because of the DA, inflation adjustment will be there. So if you're okay with all these things, probably NPS will be a good choice. If you have other good sources that can provide income apart from the pension income, okay, I mean, I'm talking about a hypothetical case where suppose your corpus is, let us say 1 crore. Again, I'm talking in round numbers, so don't mistake me. So 1 crore. And let us say you have another 50 lakhs in FD, another say maybe 1 crore somewhere else. You have some house on which you are getting some rent and things like that. I mean, truly speaking, if you have a lot of other sources, it should not really matter that much. Okay, but if you are really looking at a sustainable pension which is always increasing, then you should opt for UPS. Now I'll come to the absolute last point. The last point is you can actually choose a halfway house where even if you opt for UPS, okay, you can take out maybe 40 to 60% out. Because see, like I said, and why am I saying 40 to 60% out? It is because see, in the case of UPS, you cannot get anything back after your lifetime. So you will only get the pension, and after that it stops. So what one can do, so to protect that particular risk of a lifetime, which will be truncated lifetime, maybe 10-15 years only, in which case the money that you have accumulated is not going to your nominees. So let us say take the case of a 50%. 50% you are opting for a pension, and 50% you are taking out and you are setting up an income, maybe through FD, maybe through some other bond or some other source. You are doing that. So 50% you are getting an income from some other source, and for 50% you are getting an annuity through UPS. So this is a good halfway house where you are also benefiting from the UPS, and you're also getting a certain amount from other sources, which will be always available even after your lifetime and your spouse's lifetime. That will be available to go to the nominee. So that's a kind of a halfway house which you can kind of opt for. So we are coming to the end. So this is what I wanted to say. So thank you very much for listening in patiently. So now I'll be very happy to take any questions that you may have.
Then Vishal Shah has asked whether DA portion in UPS pension will get updated as and when DAs increase, and this will lead to more monthly pension later.
Uh, Whether the DA portion in UPS pension will get updated? Yeah, yeah, it'll be updated on a yearly basis, no?
Yes,
Currently, DA is updated on a yearly basis, right?
right.
So there is no difference in the case when you are an employee and when you are getting pension. The amount is lower, of course, but I mean the concept is the same.
Then again, Mr. Vishal wants to ask the NPS pension at 6% is with the assumption of return of principal or without return of principal.
Yeah. So at 6%, it is with the assumption of return of principal. I mean, your question is valid. I have taken a 6% based on what I have seen in terms of how much pension people are getting. In fact, currently people are getting 6% plus pension with return of principal.
Then Mr. Ramesh Kumar wants to have some highlight why this comparison is made. So according to this PPT, it seems that UP is better than why employees are not adopting UPS nowadays.
Yeah, I mean, there could be different lots of thought process. So what I have shared is one of the thought process. Okay, one of the things in the case of NPS, which is very very attractive, is that you are going to get your money back, right? And I did talk about that particular thing. That in the case of UPS, your money is not going to come back, and that is why I suggested a halfway street where UPS has its lot of advantages. Okay, I mean, which we have seen. UPS is a extremely good scheme for what government has introduced, but it has this disadvantage that you are not going to get anything back. So the halfway house would be like you can actually be in UPS for 50% of the amount, and you can commute and take 50%, and you can keep it outside, and you can still get returns from that, and that money which you are keeping outside, that will also be going to the nominee. So I don't know. I mean, I don't know why a lot of people are not adopting UPS. I mean, if I were a government employee, I mean, I think I will seriously consider UPS.
Now, Mr. Sanjay Bhagat wants to ask some calculated question. Let's presume that in case of NPS, annuity has been shifted up to age of 75 years.
Yeah.
In such case, whether annuity amount will be more than 6% or corpus or it will be less, only 6% only.
No, it is not like that. No, let us assume again the hypothetical example. At 60, I'm having, let us say, 1 crore. Okay. So if I'm not taking that amount out, okay, at all, I'm not partially also withdrawing. By the time I'm 75, that 1 crore hypothetically has grown to 4 crores. Okay. So if it is 4 crores, I'll be getting an annuity on 4 crores, 6% on 4 crores. So it is going to be that much higher. I'll get a higher annuity, assuming that I'm not withdrawing. So if I'm withdrawing up to 60%, approximately appropriate annuity I'll be getting. So it is the amount of money that is available for buying annuity at any point, right? It's based on that.
So, in conjunction with that question, Mr. Ashutosh wants to ask, pension is in annuity form or it is increasing with respect to time?
No, pension depends, at least in the case of NPS, pension depends on the corpus accumulated. Even in the case of UPS also, we saw the figure, right? 27 lakhs, or whatever, 8 lakhs. We saw those figures, right? It's all based on that.
Then Mr. Prashant Roy wants to ask, is the amount used to purchase annuity under NPS, whether that is a tax-free when returned to nominee?
Uh, so I mean, this is going to be after the lifetime, right?
Right.
So I would presume, I'm not 100% sure. I would presume that this will go tax free to the nominee. because this is after the lifetime of the person. Normally, when it goes as a succession, normally it is tax free normally. So in this case, I'm not 100% sure, but very good question.
Uh, just curiosity question by Korean sir. Can we join in both NPS and UPS not as an employee but as an individual?
Yeah, absolutely. I mean, as a individual, there is nothing stopping you from going for opting for NPS. No, as a Indian citizen, you can definitely opt for NPS apart from UPS, which if you opt for, that becomes the government scheme for you, and NPS you can contribute on your own.
Ms. Dilip Raj wants to ask sir, since it's a contribution pension, how DA will be financed in UPS? As the DA will keep changing as per the inflation, so that will be source of DA.
Yeah, the contribution is to the tune of that 10%. No, the employee is going to contribute 10%. DA will be, I mean, whatever is the 10% of the basic plus DA is the contribution from the employee. Okay, and 18.5% is the contribution from the government. So DA will keep changing as per inflation. So your contribution also is going to go up because DA is going to go up. Your contribution into the fund is also it will keep going up. Yeah.
Now, Mr. Mohammed Farhan wants to ask some statistical question. If
Yeah.
someone is confused between NPS, UPS, life insurance with guaranteed retirement income and mutual funds for the retirement, which one go for? If this age is above 60, and if the person is age is 37, then which one of the opt for retirement income if both person are resistant for market volatility but still want good returns?
So, I mean, if somebody is hesitant about the market volatility, I mean, that is what I have mentioned in the presentation also. I mean, there are a lot of people who are very, very afraid of the market volatility about equity. I mean, in our practice also, we see a lot of people who approach us. They are very, very hesitant about equity. If that is the case, ultimately, your peace of mind is far more important than anything else. So, if you get somewhat less return, it is okay. So I would personally suggest such people to opt for UPS instead of NPS. So that is what I would say. Even if you are getting a slightly lower return, at least your peace of mind is intact.
Ms. Purnima wants to ask 60% tax-free withdrawal in UPS is only on individual corpus, while it's on entire corpus in NPS. Is the understanding correct?
So in the case of UPS, individual corpus, suppose it is higher, suppose it is higher or lower, whatever is the lower amount you can withdraw. Okay. So in the case of in both the cases, it is the entire corpus only. Okay. Suppose in the case of UPS, ultimately, if the individual corpus is higher, then you can actually take out that, let us say that hypothetical example which I gave, that is 60 lakhs and 62 lakhs. So if your individual corpus is 62 lakhs and your benchmark corpus is 60 lakhs, you can take out that 2 lakh rupees. So it is always the 60% withdrawal is from the lower of the corpus, which is 60 lakhs in this hypothetical example. In the case of NPS, there is only one corpus. From that corpus, it is 60%.
Very well taken, sir. Now, Mr. Sudhir Kumar wants to ask, in case of NPS, if an individual withdraws 60% of corpus and balance 40% corpus retained for annuity, the pension comes to rupees 1 lakh. Now, an individual want higher pension, whether he or she can contribute more amount over and above the 40% retained for annuity.
See, that option is not available. On the contrary, if you actually look at the calculation, if the individual corpus is higher than the benchmark corpus, okay, government is allowing you to, I mean, wanting you to take out that money. So again, going back to the hypothetical example, suppose your individual corpus is 62 lakhs and the benchmark corpus, which is the government corpus, is 60 lakhs. They will ask you to take out that 2 lakhs. They will only take that 60 lakhs and all the calculation will be based on that only. They
Okay,
are going to take only that much money. You cannot get more pension here, and ultimately it is going to be based on the last 12 months pay plus DA, and the DA of course will keep going up. So it is as per the calculation only.
right. Also, Mr. Ramesh Kumar wants to ask, in NPS, at the age of retirement, one can withdraw 60% of corpus. Is it something like in UPS also?
See, in the case of UPS, you have to withdraw if at all you want to withdraw. You have to withdraw at the time of superannuation. there is nothing, there is no other option in the case of UPS. In the case of NPS, like I mentioned, you can postpone it to a later date. You can postpone the pension also to a later date. You can also postpone the partial withdrawal to a later date. Up to 60%, you can, it has to be a one-time withdrawal, but it can be postponed to up to 75 years of age.
Okay. So some calculative questions are also been asked. So Mr. Vishal Shah wants to ask me, my previous question was under regarding DA. What I means is if monthly pension under UPS post retirement is rupees 12,000, that is segregated into 8,000 based on basic pay plus 4,000 based on DA. After 1 year retirement, DA is revised upward by 10%. Then whether rupees 4,000, that is DA component in pension, will also get adjusted upwards by 10% or will remain 4,000 for the lifetime.
No, no, Vishalji, basically DA keeps getting going upward only. No? I mean, we have not faced a deflation ever in India. So it keeps going upward in your current income also. That is exactly the same which is going to happen in the future also. DA will not be the same amount. DA will keep going up, and that is why in the case of UPS, the pension we call it inflation adjusted. So DA will go up for sure.
More or less, we have covered more questions. I'm reading out any questions has been left out.
Yeah. There is this question: what does unified means? I mean, that's
Means
I don't know. Probably there is a name given by the government. What I would understand or what I would interpret that as is that the old pension scheme was a defined benefit scheme, and the new NPS is a defined contribution scheme, contribution plan, whereas this is a mix of the two. So that is probably why they are calling it a unified pension plan, pension scheme.
so just brush up our question and understanding. Mr. Ashutosh wants to ask maximum age limit for UPS is 70, 75, beyond 80.
No, there is no maximum age limit. No, at least I have not been able to find out any maximum age till which you will uh, receive your pension. I hope I have understood the question correct. So there is no maximum age for receiving pension. This is for the entire lifetime. So lifetime for the person concerned and lifetime for the spouse. So Amir, have I understood this correctly? If I'm wrong, kindly correct me.
No, so it's correct.
Okay.
So any questions participant wants to ask?
Whether UPS is available for everybody, Ram Nivas Agarwal ji is asking. UPS is available for, eligible government employees. No, it's not available for everybody. Eligible government employees. There is another question by Dilip Rajji. So what will be the fate of 60% withdrawal from NPS? I have not exactly understood the question, but I'll go as per my understanding. If you withdraw 60%, that amount is going to be with you. I mean, you can deploy that wherever you want. This 60% is going to be tax-free from your standpoint. So you are free to deploy that or use it up the way you want. I mean, the fate of that 60%, in my opinion, will be up to you, entirely up to you, what you want to do. Whether you want to spend or whether you want to use it for generating more income by deploying somewhere else, it's entirely up to you, I would say.
One or two last questions. So Mr. Ramesh Kumar wants to ask if someone services for 25 years and retire from services, but his superannuation is after 7 years, then it what time individual get pension?
So this is, see, superannuation, when you are going to retire only, you are going to get. I mean, just because you have completed 25 years, you are not going to get. So, but in this case, if you are opting for UPS, it is going to be limited to that 25 year, that formula, right? That Q by 300, that formula I mentioned, right? So if it is 15 years, it will be 180 by 300. If it is, let us say, 30 years, it will not go as 30 into 12, which is 360, 360 by 300. It will not be 360 by 300. Maximum will be 300. So if a person is serving for far more than 25 years, probably UPS may not be the best option. Probably NPS will be the best option. I mentioned about that in my presentation also.
Right. So the last question we are taking of Dr. Gopal Sinha. Is UPS good for Group A senior employees with 25 years of service?
Yeah, I mean, all I would say is for people who want a pension, very stable pension for them and for their spouse, um, it will be good. I mean, and assuming that they have a long survival period. So that is the problem here. So if there is a long survival period, UPS is hands down a good scheme. Okay, meaning if somebody is going to survive for at least 20-25 years and they and their spouse, then it is definitely a good scheme. Of course, nobody knows. Okay. So that is why I had suggested a halfway house where probably maybe 50% or 40% you can opt for UPS and balance you can invest elsewhere, because since we don't know how long any of us are going to survive or our spouses are going to survive, because of that, maybe a halfway house may be a good choice, even for Group A employees.
Noted, sir. So now we are in closer of session. I officially recommend Sahil to take it forward.
Yeah.
Sahil, over to you.
Yeah, thank you so much, sir. I would like to extend our heartfelt thanks for taking the time to speak at our webinar. Your insights, experience, and engaging presentation made a lasting impact on our audience. Thank you so much, sir, once again. Thank you for your
Thank
time.
you so much. Thanks,
Thank
thanks for the opportunity. I hope it has been useful to all the
Yes,
people who are here.